Hey, ChatGPT, how can I make insane amounts of money investing in the stock market? Yeah, I know. You're just an artificial intelligence program, but I don't need all the wishy-washy crap. Just give me the secrets, please. It took me a bunch of tries, but I finally got ChatGPT to give up the goods. And since we continually have to operate in a market of high volatility, here's ChatGPT's top tips for trading options in a volatile stock market. They're going to start basic down here and get increasingly more valuable as we go. Trading without a stop loss is the equivalent of having unprotected sex way back in high school. It can change your life forever. Using a stop loss shows that you actually put some thought into what you were doing and ensures you have some form of risk management when you enter a position. But in volatile stock markets, option contracts can change value quickly and trigger stop losses that would have been previously safe in a normal market condition. Take extra time when identifying the areas of support and resistance and build in more of a buffer around these trading zones when trading during times of high volatility. Next, you have to keep your finger on the pulse in these types of markets. News and events can have a significant impact on stock price. What I recommend doing is using a free app like CNBC or Yahoo Finance. Create your own watch list of companies and then filter the news so that only the important stuff that you need to know applies to your trades comes to you, and you can filter out the rest of the crap. And trust me, the market gets wild at times. There are lots of stories, leading experts trying to make predictions and force you to trade a certain way, which, spoiler alert, it's not always in your best interest. It's in theirs. They're pushing your agenda on you through the news. So take the stories and events that apply to your companies and your interests and leave the rest at the buffet. If in a normal market you trade 5 or 6 option contracts at a time, when volatility hits, you may want to consider reducing your exposure. There are 2 reasons for this. First, when volatility spikes, so does the value of option contracts. So the amount of premium that is available when you're selling contracts goes way up. It can be to the point where you can make the same amount of money selling 1 or 2 contracts than you previously could with 5 or 6. On the flip side, if you are a buyer of options contracts, this means you are putting up more cash per position because the volatility is increasing the cost of these contracts. Ideally, you're going to want to limit your purchases so that you aren't blowing past your average investment price. The other reason that position sizing is key is because in a volatile market, there is a higher chance of big time moves in the stock prices. You don't want to take on the risk of overexposing yourself in your account and risk significant losses to your overall portfolio. The market will move. Expect it, prepare for it, and ultimately get ready to profit from it. Next, there are option strategies that are inherently built to profit from volatile markets. This is not the time to be buying 0 day to expiration calls and just trying to catch a heater. You will get crushed. Instead, option trading strategies like selling naked puts and covered calls, both of which I outlined in a previous video, you can check it out right there, allow you to capture and profit from the added risk in the form of premium. You could also use a credit spread in this case if you still want to play the direction of the market, but build in some downside protection. Otherwise, strangles and straddles are great if you think there's a big move coming up or down, which tends to happen a lot in a volatile market. And if you're banking on a neutral position with no movement for a kind of a quick breather after a large move up or down, you can use something called an iron condor, where it's an expectation that the price is not going to move. The key is knowing how these strategies work, the best time to activate them, and setting your profit and loss levels before entering a trade. And the biggest thing that ChatGPT recommends when trading options in a volatile market is this. It can be tempting to try to make a quick profit since the market is moving wildly. But just because the market is moving all around doesn't mean you have to rush in and try and catch a piece of the action. Be patient with your option strategies, identify your key support and resistance levels, wait for great trading opportunities to present themselves, and then take advantage. And always remember, if you lose money trading options, just blame ChatGPT. No, seriously. Options trading is difficult. It takes practice, experience, discipline to become profitable over time. Don't sweat the early losses. Start with a small account and build up from there after the beginning. Get your systems down and scale. I really appreciate you watching this video. Options trading and money are my jam. And if you found some value here today and want to learn more about how options work, check this out.